While the S&P 500 has been having a very good 2024, we can see Lowe's company, stock ticker LOW, now trading at $216.38. Year to date is down around 2.77%, so underperforming the market by quite a bit. And we can see on March 21st, this company was trading as high as $261 per share. So since that time, over the past 2 or 3 months, they've come down by quite a bit. We can see again trading at $216.38. We also can see recent news coming from Lowe's. They're increasing their dividend by around 5%, and at first glance, that's an okay dividend hike. That's pretty decent. But when we look at where they've been historically, that's pretty low. So let's go ahead and jump over to our dividend breakdown spreadsheet. Come over here and plug in LOW and hit enter. And we can see all this data will automatically load in. And like always, if you'd like to be able to download any of my spreadsheets and be able to automatically pull in stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. Now, we can see Lowe's currently has a starting dividend yield sitting pretty close to 2% at about 2.03%. But people love the dividend growth from this company. Look at the 10-year dividend CAGR, sitting at 18.29%, in the 5-year, 16.39%. That is rapid dividend growth. This company massively grew their dividend payout over the past decade. We can see it's gone from around 68 cents per share to in 2023 all the way up to $4.30. And the beautiful thing about this is the free cash flow payout ratio has stayed in a very healthy range during that entire time period. We can see it's been in around 20 to 40% during this time period. But here's part of the problem. We can see 2020, we saw a huge spike up in free cash flow for companies like Lowe's, companies like Home Depot. People had a lot of time at home and were doing a lot of home renovation projects during this time period, which definitely helped spike up free cash flow for those companies. 2021 was high as well, but it was a little bit of a decrease from 2020. But over the past few years, we've seen this steadily decline. So when we see increasing dividend payouts and decreasing free cash flow, obviously we see an increasing free cash flow payout ratio. So in 2020, that free cash flow payout ratio was as low as around 18.41%, but it's now jumped up to around 40.98%. Again, not necessarily in a bad place, but we do have to keep in mind this has been trending upwards. If we jump over to our stock screener, let's go ahead and come up here and plug in LOW and hit enter. We can see this data will automatically load in. Now we can see another way this company has been rewarding shareholders is by buying back shares, and they have bought back a lot over the past decade, going from around 1.15 billion now all the way down to around 629 million. So that's pretty significant share repurchases over the past decade, definitely helping boost up the share price during that time period. We can see top line has done pretty good, revenue per share has grown, earnings per share is the same, and free cash flow per share is the same. But the company also has really nice levels of return on invested capital, meaning that the projects they invest into are pretty profitable. We can see in 2023, ROIC of about 30.48. That gives me a lot of confidence in this company. And then if we jump over to the profitability tab, something I like to see from companies that have grown a lot is steady gross profit ratios. And we can see that has been the case for Lowe's. It's been sitting at that 33% range pretty much for the past decade. I think that's a good sign. So when we look at the historical data for Lowe's, the key metrics look great, the dividend metrics look great, and they've seen a lot of share price appreciation over the past decade, outperforming the market, up around 353%, even though they have lagged behind year to date. So the big question is this lower dividend growth rate going to be the standard for Lowe's moving forward? For a company that has a starting dividend yield of about 2%, for me personally, if I were to buy that type of stock, I want to see pretty high levels of dividend growth. A low dividend growth rate along with a low dividend yield is not a combination that I'm looking for. So here's where I have one big concern about the company, and this can be easily unveiled by using the balance sheet breakdown spreadsheet. If we come up here and plug in LOW, you can see all the data will automatically load in. Now, if we look at the debt to assets ratio over time, we can see this has grown pretty significantly over the past decade. In 2013, it's sitting at about 32.14%. Move forward a few years, it's still in a good range at about 48%. We can see as of 2023, this has now climbed all the way up to around 92.59%. So they're really starting to have quite a bit of leverage. And if we look at the current ratio over time, it's currently sitting at about 1.23. It's a little bit better than they have historically speaking, so I'm not necessarily concerned there, but that debt is definitely something to keep an eye on. So moving forward, it will be interesting to see if they can maintain those high levels of dividend growth. I think the 5% dividend hike, again, it's decent, but it does have some investors wondering if that dividend growth will be sustainable moving forward. Now, like always, if you'd like to be able to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.